First up tonight, the Fed. The Dubs won, dollar lost, gold surging, and stocks couldn't even benefit from easy money. It's really pretty awful. Is Bernanke and company barking up the wrong tree? Are they targeting the wrong indicators? Let's debate this. Here now is CNBC's senior economics reporter, Steve Liesman, CNBC's great super reporter, Rick Santelli, associate editor for FirstThings.com, David Goldman. Okay, let's have some fun with this. Rick Santelli, I want to go out to you. How pathetic is it that not even the easy money dovish statement could help stocks? I mean, stocks fell along with the dollar, and of course, gold is soaring, Rick. Now, you tell me, what's wrong with this story?
Well, we know what's wrong with it. You know, I was talking to some small business owners that were on the floor today, and their sense was that all the businesses and all the leaders of the country that are talking about Mr. Greenspan keeping rates too long, his rate being too low, too long was 1%. What's this Fed doing? Take it a step farther. He has now pushed corporate America into thinking low interest rates are going to be around forever, and in essence has pushed the thinking of these small businesses in the same camp that homeowners were pushed into thinking there was comfort in adjustable rate mortgages. So for the most part, you're never going to be able to remove this moral hazard because businesses now are grown to expect that low interest rates will be here forever. It's a terrible, terrible story.
Right, Rick. And these small business owners want higher interest rates because it's so easy to get a loan that they'll qualify even more, Rick, and the banks will be more inclined to lend them money if the Fed raises the bank's cost of fund. In addition, Rick, I'm sure these small business owners don't export, and what they really want is a higher value of the dollar to make their exports less competitive on the market. Rick, who are these guys you're talking to?
Listen, do you think that the people that had adjustable rate mortgages with the blessing of Mr. Greenspan, do you think they wanted interest rates to go up? I'm not telling you what they want. I am telling you that you're creating an entitlement-type moral hazard. That's what we're talking about here.
And not to speak of the fact, Steve, we've got to get to Dave Goldman. You are now become the quintessential instant gratification guy. And you know what? This doesn't work in the long run. Look, Andrew Barry, this kind of instant gratification of zero interest rates, and you can't get a loan
I don't know, Larry.
So
the
what makes you think
is not too instant? We
there
did
is,
minus 6
there is no gratification.
On GDP.
Let me ask
you. Are you gratified?
No, I am not gratified because the future is what the Federal Reserve is supposed to protect. And here's the point you're missing. Okay. Andrew Barry gave it to you the other night from Barron's. We are no longer in a financial emergency. The economy is recovering. The financial system is recovering. Why is the Fed keeping emergency zero interest rates?
I will tell you
heard Rick Santelli lay out the futuristic problems with this.
My understanding, reading the statement today, Larry, is the Federal Reserve does not have any confidence in the turnaround. There were some minor tweaks in the statement about the economy that kind of upgraded just a little bit. They do not feel like it is time to raise until they feel confident about the turnaround. That won't be the time to take back accommodation.
See, Dave Goldman, that's the problem. Steve Liesman just laid out the problem, however inadvertent and unwitting. The fact is the Fed is looking at the wrong indicators, David. They're ignoring the dollar decline. They're ignoring the fact that gold at 1,100. I think our friend Dave Malpass said gold is now higher than the S&P. That can't be a good thing. You know what? They're even ignoring the fact that the inflation spread, the tip spread, has actually now gone from 0 to 211 basis points. So, David Goldman, should they be targeting the economy, as Steve Liesman wants, or should they be targeting financial and currency indicators?
Well, what the Fed should be doing is letting the short-term interest rate float and stabilizing the dollar. The market will tell us what the right interest rate is. If you fix the dollar to other currencies, and Robert Mundell, the genius who produced the Reagan Recovery Plan, says fix it to the euro and the Chinese yuan, then the market will tell us what interest rate we need, which is clearly higher than what we have now. But as a matter of fact, the question is who's getting this money at near zero interest rates. It's not small business because we have the fastest rate of decline of commercial and industrial lending by banks in all of American history. 10% a year. It's not the Main Street that's getting it. It's large financial institutions who are borrowing cheaply from the Fed and buying back the toxic waste securities whose prices have doubled, which is why the banks have had such big so-called trading profits in the third quarter and why the bank stocks are coming off
and
now.
And meanwhile, Rick Santelli, they are planting, and I'm not going to call them mustard seeds. They're planting inflation seeds, Rick. It's like, haven't we seen this before? You know what people forget? Not only did the cheap dollar...
The 70s? Maybe they forget the 70s?
They forget the 70s. You know what? They forget the 2000s, when the dollar fell almost 50% during the Bush administration, and it's fallen another 15% during the Obama administration, and $150 oil commodity speculation helped destroy the economy. And Rick Santelli, why is the Fed compelled to have negative real interest rates against the Fed funds rate? You know, if you look again at that TIPS model, the inflation-adjusted TIPS model, it's saying we're over 2% inflation. Beginning of the year was 0. You subtract that from a 0 Fed funds rate, you got a negative real interest rate. It's like Argentina, Rick. That's the thing. Steve Liesman loves Argentina, but I say you can't devalue your way into prosperity. You can't do it.
No, on the 18th of November, we're going to get CPI. And for the next 3 months, watch very carefully what CPI does year over year, because the numbers we're pulling back a year ago for the next 3 months are negative numbers. So you're going to see, the numbers games that we play. I don't like to use the word inflation. I like to use the word higher commodity prices, and the government, via the Fed, is directly responsible. So when gold, if it gets to 2,500, like oil at 150, they better not look us in the eye on the exchange floors and say it's the traders. It's them. It's Rick, the fact that the dollar, as a word, has been in the statement 0, 0, 0 times.
The Federal Reserve, unfortunately, is not responsible only for commodity prices. They're responsible for the aggregate price level.
Right, so they're not at par with America. They're out of sync with America. Who are these guys?
You, as the self-appointed...
I am the self-appointed nothing except for somebody who likes to purvey the truth.
The common man, Rick, look the common man in the eye and say the right thing for you out there, according to Rick Santelli, is higher interest rates on your credit card.
Isn't
higher interest rates on your bank.
Do what you're going to do.
The common man is not getting the low interest rates. I mean, that's complete nonsense.
On their savings. They are on their savings.
So hold on. The common man is not getting the low interest rates. They will get those low interest rates, all you people say, if the Fed raises rates. That will be what lowers interest rates for common folks.
What's happening to common folk is that the devaluation of the dollar is causing a mass destruction of their wealth. We're conducting a fire sale. Excuse me.
How so?
We're conducting a fire sale of the United States, which is good for those stocks which have international tradables or high foreign earnings. That's what's held up the stock market.
So
most stocks are doing very badly. A minority of large cap stocks are doing well.
Because he's about to get to
the stock market is up 60% in this time that you guys have worried so much about the dollar. Talk about what's happened to the common man portfolio. It has increased.
No.
That is just a point of fact that is wrong.
We still have 20% unemployment.
Wrong, and you said yesterday the dollar value doesn't matter.
It's not what I said, Rick.
I can't believe these comments you make.
Not what I said, Rick. If you want to put words in my mouth, feel free.
What I said
is that the dollar should not be the goal of policy.
And by the way,
the economy should be the goal of policy.
No, I don't
agree. And the greatest benefit for all folks, and it is not targeting a dollar policy.
David Goldman, go back to Professor Nobel Prize-winning economist Robert Mundell, who directly contradicts. See, this is what Steve Liesman doesn't get. The Fed shouldn't control. I thought the economy was regulated by tax rates and fiscal policy. It's the price level and inflation that's regulated by the value of our money, and the presumption is the money supply, David. This is what you need to give. It's only a 30-second primer to my friend Steve Liesman about the proper mix of fiscal and monetary targets.
Mandela's idea is very simple. Use the tool that does the job for each problem, monetary policy to control inflation, and tax incentives to get growth. What we've now have, we're throwing money out of a helicopter. None of it's getting to the common man who's paying 30% on his credit card in any case. None of it's getting to small business. Small business lending is dropping by 10% a year, worst rate in history. It's only going to large institutions who are using it to goose up profits by levering up toxic waste securities.
And by the way, consumers are getting completely screwed by the cheap dollar when they go to places like Walmart, who import those goods from overseas.
Larry, you're misstating it.
They get get completely screwed by that.
The reason you've got low CPI,
you have been so you are drinking the Kool-Aid from the Fed.
Hold on.
Why do you have low CPI? Excuse me.
Let me make this point. I promise to be quiet. What percent of total Walmart imports, Larry, come from countries that have completely tied their currency value to the dollar? China. What has been the change of the price goods from China? Almost nothing.
Wait a second.